we are live in the studio today with Peaks Money Talk with Lloyd and with Nathan, talking about important investments when it comes, of course, to your money. Today we're going to be talking about RRSPs, that's Registered Retirement Savings Plan. Welcome to the show, everyone. Thank you for tuning in. Again, on today's show, we are talking about RRSPs with Lloyd and with Nathan. Now, diving right into thinking about RRSPs, I mean, I heard it in very early years, people saying, you should get an RRSP, you should do this. Like, what are, in simple layman's terms, what's the benefit? First, I guess, let's rewind. Even what is an RRSP?
Well, it's a pension plan designed for you later in your life. And designed primarily because most companies don't have company pension plans for you. And it has a way of deferring your income to when you retire and using it then. So you become a person that has more money when you retire.
Well, and even if you don't have a pension, for instance, you're self-employed. That would be a good example, I would think, like to think about the future, to think about your financial future, to getting into RRSPs. Would that make sense?
You're exactly right. You get into RRSPs, you're saving money for down the road to spend when you've got more free time.
We all want more free time, don't we? So, okay, so obviously we're talking about saving money, but I think, can we dive a little bit deeper, Nathan? Like there are obviously some benefits that even if you are in, let's say, I'm thinking about from experience and people I know that have put money into RRSPs to lower their tax brackets, for instance, and that meaning that, there are obviously certain tax brackets when you pay your income tax that you pay into when you make a certain amount of money, right? So if you, correct me if I'm wrong, if you were to put money into an RRSP and save that money for a later time, you could potentially then have to pay less income tax to the government now.
Right.
Does that make sense?
Yeah, you're pretty much bang on there, where the biggest benefit would be when you're in one tax bracket and you put money into an RRSP, that will reduce and put you usually into the lower tax bracket, which then you get a little bit less income tax, or pay a little bit less in income tax. So that would probably be one of the biggest benefits to it, is lowering your tax bracket now when you're working all the time, and saving it when you go to retire when you're at a much lower tax bracket.
So that interests me, and I didn't know about, how do you get into a lower tax bracket? Is that because technically you're making less money, or is it because of an age thing?
So no, what it is so if you were to contribute, say $10,000 or $5,000, and you're at a $50,000 income, to the tax man you only make $40,000 if you were to contribute $10,000. So that's kind of the benefit of investing into an RRSP.
Which could be significant for people. Like if you were going to be putting in, it could be $5,000, it could be $10,000, it could be $20,000. We'll get to that in a moment of like limits. The one thing I wanted to mention too was about, well, let's even talk about how much can you actually contribute to your RRSPs. How does that work?
You can contribute up to 18% of your income.
Which is a fair amount.
Yeah,
like 18% is a feisty amount.
And it's limited at somewhere around $26,000. It has a variance every year, but that's a maximum amount that you can put in. And it's based on what your income was that year. Okay. So it's totally based on your income, and that's what you end up allowing to pay into your RRSPs.
And something that you should be, if you're looking at your income tax return each year and you see at the bottom of what you can contribute, you'll notice if you haven't contributed an RRSP, you'll see it's what you are allowed to contribute does grow. So can we say that, how does that work? Every year you are allotted a certain amount, but can you top it up, or how does this work?
Right. So say, for instance, you didn't contribute the last 5 years, and all of a sudden you had some money that you can contribute to this year. those other years count as accumulation, even though you didn't put any money in. So there is an advantage that way. So even when you were working, but you didn't have the funds to put into an RSP, it still accumulates, and in the end, you can still add at a later date.
In terms here, if you don't use it, you don't lose it, right? You do get to accumulate it, which is very good in the sense that I'm thinking like, what if you received an inheritance? What if you, where I'll say, what if we won the lottery or something like that? Great, right? But no, but totally honestly, like, what if you had an inheritance and you something? I think that's the time really when you want to seek advice from a financial advisor. If you are growing, you want to save for later in life. But two, I keep bringing up an inheritance. Like, what should I do with my money and how can I best use that? Now, obviously, things like that aren't necessarily taxed, but what do you want to do with it later in life? So it grows and works for you, right?
Right.
Another thing to take into consideration, especially when we're in the agricultural area that we are, say for instance they're selling a massive amount of their place.
Okay,
and
so like lots of acreage.
Yeah,
okay.
acreage or livestock or whatever.
Oh, okay.
And there's a big amount of income that year. You can defer it and put it into your RSPs as a way of not paying all the income tax that you would on a normally high year.
Oh, that's I never even thought of that. Okay, so we've talked about some of the benefits. Are there any other benefits that we should be talking about in terms of RSPs? Obviously, that's a big one, lowering your tax bracket. Right. And you've talked again about being, if you're selling this and you want to put your money somewhere else to keep it for later. Yeah. Is it about really a savings? Obviously.
Yeah. Well, the other thing that is, I think, a great advantage to put or investing in an RSP is anything that is grown within the RSP is all tax deferred until you go to start taking it out at retirement. So any growth, you don't have to worry about it being tagged on to your income that year because of, if the markets did well one year. It's none of that. It's all deferred until you go to take it out, and it's all taken out by income.
Wait, and technically that plan becomes your income later in life.
Right.
Right?
That's correct.
Yeah, so it makes sense, and it's just about planning for the future overall, right? Okay, so one thing we should talk about right now is every year, we talked about on your income tax form, we see how much you're allowed to contribute, but also how there are deadlines for RSPs. You can't just say, I want to purchase an RSP right now. There are specific deadlines each and every year.
It's 60 days after January the 1st.
You mentioned, one of you had mentioned about that your RSP could have done very well that year and you don't have to pay for it later on. Can we talk about investments in RSPs? Like, how do you put money into an RSP, but how do you determine where that money goes? Like, how do you invest it? That's where I would guess a financial advisor comes into play.
Right. And you can pretty much invest in anything from stocks to bonds, mutual funds, any of those sorts of things. You can pretty much invest in an RSP with that. Risk, you can go from low risk to high risk, whatever you feel comfortable with when the market or when you're in the market. Other than that, it's pretty much just a device that you can save with.
Well, and if you're not in it each and every day, like the two of you are, right? You see the highs, the lows, what's going on each and every day. That's where I personally want to seek your advice as the advisor, knowing what are the markets doing, where is this going. Something I wanted to ask as well right now was about, and I don't know if maybe you haven't, maybe you're aware of this, maybe not, but there's something called, is it spousal RRSP?
Yes, that's where you contribute your contribution room to your spouse's RSPs. And the benefit of that is it comes out as her income. Because
his.
Yeah, either one, that's correct. And it's a way of deferring money to your spouse. And it's an excellent way of having two incomes of RSPs coming out instead of one. Now, it doesn't increase your contribution room by putting it in a spousal one. It just puts it over in the other person's name.
Yeah, so it's more for later on when you're both taking it out in retirement. So usually in a family, sometimes a spouse is making more than the other, but when it comes to retirement, it's more just kind of like an income splitting. So at retirement, you can both take out approximately the same amount. So that's essentially what the benefit
And
is.
then would you be at a lower tax bracket because you're withdrawing you've split it up between two people? Is that right?
Right. You're exactly right on that.
Okay.
And that's kind of the advantage of,
Okay.
so instead of all the income coming out of the RSP of one of the spouses and then end up being in a higher tax bracket because he's pulling out so much, it income splits and allows the spouse to take some out or equal amounts if you time it right or put the same amount in. And in the end, it lowers your tax bracket.
Right,
So-
because you're deferring between two people.
Right.
So let me get this straight. Let's just review it one more time. With a spousal RSP, it does not increase your limit. Your limit is your
Yeah, that's
limit.
right.
But you could put into your spouse's RSP and also your own? You can put into
Right,
both?
Yes,
Yeah.
you can put it into both.
Okay.
But it still doesn't increase your room that you've got.
So I'm thinking example here. Would that not be, let's say the person has maxed out their limit on their personal, so then would they defer that to the spouse, obviously?
But it would be in her name then.
Which is okay,
Yeah,
but
so-
you could still take some of your income and put it into that person's name.
Right.
Is that an
Right.
example? Like, is that why people do
I
it?
don't think that would be correct, Melissa, because what would happen is if once you've used up your room, you don't have any contribution room, it would have to go under her name and her RSPs.
Okay, got it.
Yeah, here's an example. So if the spouse was at the max contribution of $26,500 and they wanted to income split, what they could do is split half of that and put half into his own RSP and the other half into a spousal, and that would then split it when it comes retirement time, but at tax time this year, it all goes under the spouse that did the extra contribution
Which
to
then
it.
lowered that
Which
person's.
lowered that spouse.
Exactly. Okay, so
Right.
that's what I'm thinking of there,
Right.
and you were divvying that up. Okay,
Yeah.
cool. I get that. This is why you need a financial advisor, because it's not cut and dry. I mean, the rules and regulations, I feel like they change each and every year, right? Am I correct?
That's correct. Another thing that plays into this, which has just happened within the last 3 or 4 years, is called income splitting with retirement people. So
Okay,
as-
what is this now? Okay.
that you can have a certain amount of your RSPs, CPP to a certain extent, depending on the number of years you're together, and you can split up to 50% of your RSPs. So it plays into it, but there's times when you want your RSPs maybe earlier, or you might be working and, it's an advantage to have it in her name or your name. Either
What
names.
are there other advantages of doing that? Like you're saying there are advantages.
Well, one of the advantages is you're splitting it up, and maybe they want to take it earlier, say before 60, 50, and you're still working. It gives you a chance for them to draw it out and give them an income when you put it out in spousal. As long as it's been in a certain period of time, which is more than 2 years.
Okay, so that's important to note. So it has to be over 2 years.
Yep.
So as long as you've had the money in your RSP for 2 years, you can withdraw it.
Yeah, and then it's
No,
not
with the spousal.
With the
Yeah.
spousal?
Side.
Okay.
Yeah.
It's not
Obviously, you want it to grow for you,
Yeah.
though.
Yeah.
So you don't
Yeah.
want to do it in 2 years. You want
Yeah.
You want this
Right.
to be a long
Right.
term.
Right.
Yeah.
Well, with taking it out, there is a little bit of a consequence that way, which you are allowed, but you are going to be withheld tax because it was money that you never did pay tax on to begin with.
Right.
So you got to take into consideration if you do put the money in and you want to take it out because of an emergency or any of that, you will, but there will be tax consequences to it with taking it out.
Okay, so let's now talk about when should you take your RSPs out? Like what age do you recommend? Is this something like, is it the Freedom 55? Is it 65? Is it 71? Like is there a magic number, or how do we figure this out?
The automatic number that you have to consider is you have to flip your RSPs to a RIF the year you turn 71.
Okay, so that's where it like maxes out in that sense?
Well, no, that's
like,
the year that you have to
you
start.
have to. You have to.
Yeah.
Flip it
Okay.
over, because you have to start taking it when you're 72.
Okay.
But there's another thing. Talk to your advisor. Maybe there's a time you should start taking it earlier. Because people have this assumption that, oh, I'll wait until I'm 72 to take it. Well, maybe you need it when you're 60. Maybe you need it when you're 62, 65. Talk to an advisor to get the best financial and tax saving time for you to take it out. Because that's the reason why you put it in, is to take it out at a lower tax.
And do you find, in your experience, is there an average age? Is there an average number, or is it everybody? Because you deal with so many different people, from like whether it's, as you mentioned, whether they're in agriculture, whether they're in a different business, they own their business, they had a pension. Like everyone obviously is different, right?
Right.
Is there like a medium norm?
I don't
or-
think there is an actual right. It all depends on when you need the money and what kind of tax bracket you're in, I think, is some of the biggest advantages. Because, I mean, if you're not making a lot, sometimes it's better, like near retirement, say you had a good paying job for most of your career and then you kind of semi-retired, you're still working. Sometimes it might be advantageous even when you're working to take a little bit out so it's not all accumulated at 72, because what happens is there's a rate of how much, like there's a minimum of how much that you have to take out per year when you start at say 71. So and I think it's around the 5%,
5%, yeah.
somewhere around there.
Changes every year.
Yeah, it actually increases to a max of 20% that you have to take out every calendar year at age 90.
Oh, okay, so this is really informative information. One more question about age for you is, you have to do this at 71, but let's say I'm 65 and I take money out at 65, but after that consecutively, do you have to take money out every year? Or you
Not
don't?
necessarily.
No. Okay.
Well-
Do you have, like, if you start at 65, do you always have to take money out from now on then?
If you put it into a RIF, which you normally do, which
Okay,
is...
what's a RIF for people that don't know?
RIF is, it's called a Registered Retirement Income Fund.
Okay, which will be on another episode.
And
Yes.
it's like the second part to an RRSP.
Okay.
And so when you put it in there, you can, and it's been done, take them back out of a RIF and put it back to an RSP. It isn't done very often.
If you're under the age of 71,
But
you can
that's why
do
take
that.
it out one time and get your full benefit of your tax savings and everything else. Because seniors at 65 do get a bit of a tax savings on that, $2,000 or $3,000, depending on what they've got for that year. So there's savings there that they have to talk to an advisor and accountant to get it all sorted out.
So to summarize this in overall with RSPs, what would be your biggest recommendation? Would it be to like start sooner than later, or what do you recommend to your clients?
Yeah, I guess it depends on the tax circumstance is probably your biggest, because there are other options with putting your money to invest in. RSPs aren't the only investment vehicle, but I guess coming out of this, I think for an RSP, you'd have to talk to your accountant, see what kind of tax advantage would be if you were to put some money into your RSP. So I think that's the bottom line with an RSP. But starting early does help with the growth of an RSP, because you're in the markets longer. So that's probably one of the benefits of starting younger, if that's the way that you should go for tax purposes.
It's also a way for people to start thinking about retirement planning with an RSP.
It's solid points. And a lot of us, even if you're 20, 30, 40, I think as we age and as we go, we think, in your 20s, retirement, that seems like a long, awful ways away, right? Then 30, okay. 40, I'm in my 40s now, and you think, wow, that's maybe not that far away. That's not that far away. So starting early, but also speaking with a financial advisor to figure out a plan that's right for you, whether it's an RSP, whether it is something else, and we'll be talking about that in all of our future episodes. So you're definitely going to want to visit each of our episodes, because that's what we do. We cover all of these topics about your investments. Thank you, and thank you, gentlemen, for all of your knowledge. I swear I learn something new every time we do an episode here on Peaks Money Talk. Don't forget to subscribe, like our page, and if you have a question, that's why these gentlemen are here, to answer your questions when it comes to your investments. Thanks for watching.